Hello and welcome to a new video. Yes, nuclear energy is gaining popularity, and so uranium, the raw material, could be very interesting for a long-term investment. We'll cover all of this in this video. We'll look at the uranium market and 4 exciting stocks in the sector. But before we start, of course, a quick risk warning. Everything I say is not a buy, but a sell recommendation, and also not financial advice, but merely my own opinion. So let's dive into the uranium market and naturally, of course, start with the raw material itself, which is also largely responsible for the direction, especially of the mining stocks. And if we look at the uranium price, then we see that it has been for quite some years now, in principle for 5 years, or yes, actually even longer, for 7-8 years. It's been in a very, very beautiful upward trend and has even accelerated this trend in the last couple of years. And the demand for uranium remains consistently high, and we hear time and again that an increasing number of nations are once again turning to nuclear power. Accordingly, more reactors are being constructed. We will see this in numbers very soon. And it's been quite interesting to observe that the uranium price here recently established a solid high at $105 per pound. And in the interim, over the last few weeks, it experienced another temporary breakout. The trend is intact, so purely from a technical chart analysis standpoint, we are in an uptrend above the moving averages, and if we take a look at the forward curve, that's always a very interesting signal for the direction the price might develop, or rather, it's an indicator of whether we are in a supply or a demand market. So it appears that looking at the curve, we're seeing a steady development, a consistent increase in uranium prices over the next few years. So let's take a look at some numbers and facts regarding uranium itself. Because of course one also needs to understand the sector as a whole to better categorize this price increase, to be able to determine, is it truly structurally driven or is it just a short-term speculation? And if we look here, especially at the nuclear reactors, we see that we have 440 nuclear reactors operating worldwide. Almost 80 are currently under construction, which is about 5% of the existing fleet, and another 120 are planned. And we currently have a deficit when it comes to uranium production. This means that the market is facing a continuous shortage, and that's of course very, very positive when it comes to prices. If we take a look at the forecast, the market is also expected to grow by almost 5% annually. For a commodity market, that's actually quite good, I would say. And accordingly, we see the forecast here for 2032 at just over $13 billion for the overall market. And we can clearly observe here the projected demand extending all the way to 2040, which is also expected to increase by more than 100% compared to the year 2024. This is primarily due to the fact that many reactors are, as I mentioned, currently under construction, but also because the older facilities are naturally being allowed to operate for much longer periods. This means that we will continue to see additional demand entering the uranium market. So let's look at the top producing countries. We naturally see Kazakhstan leading, followed by Canada. And naturally we'll look at the 2 stocks that come from these countries, Kazatomprom and of course Cameco. Kazatomprom is purely a mining stock and is therefore more sensitive to uranium prices. Cameco is a bit more broadly positioned with the acquisition of Westinghouse a few years ago. This means they are also vertically integrated throughout the entire value chain. So they don't just mine for uranium, but they also construct reactors. Yes, as I mentioned, Kazatomprom holds the largest market share, followed by Cameco and a French company. And here we can also see a good overview of the demand drivers, and there, of course, the nuclear renaissance is to be mentioned first and foremost, and naturally also more recently, over the last couple of years, the significant and extreme demand for energy, which has been triggered by the AI data centers. This is also a truly enormous, or perhaps even the single biggest factor that is naturally driving the demand for nuclear energy in this context. Another aspect that absolutely should not be underestimated is the Sprott Physical Uranium Trust. So here, significant influence is actually being exerted by the investor side, by speculators on the uranium market, and this, of course, can further push up prices. Yes, we have a number of positive catalysts, and in the bull case, we anticipate in the coming years, much like the forward curve has already shown in the chart, a price for uranium of over $100 per pound. I actually believe or rather, I don't really see the bear case as likely, because it's very clearly stated, even by the IEA, that electricity demand will literally explode. This means nuclear energy will play a significant role in the portfolio of electricity generation, and will also tend to continue growing quite clearly. We can see this here again presented in figures. Yes, the electrical capacity that is currently in operation, that is under construction, and that is still planned. And this is now also very interesting. These are the proposed nuclear reactors. So essentially, these are the countries now considering acquiring nuclear energy for themselves. Besides that, there's another extremely large bar here, which almost represents the ideas that are currently being discussed for additional nuclear power plants that are moving into the planning phase. It's essentially the same amount we currently have in operation, and that is truly very, very significant. Let's take a look at Cameco. Cameco is, as I mentioned, from Canada. So they also mine uranium ore here. Westinghouse's reactor technology is also present here in the market. However, looking at the stock, it's already quite highly valued with a very expensive PE ratio. We will also see that again shortly in the trading view chart. The operating metrics are inherently very, very good. We have a decent growth rate, especially concerning earnings. Accordingly, or that's also fundamentally the reason why the stock has performed so well. Yes, the quarterly figures were naturally good as well. And as I said, there are several positive drivers. Production is running, and the investment thesis is clearly intact. So for anyone who would like to get this dashboard as a download, for all channel members, this dashboard will then be made available to you. We're going to take a detailed look at Cameco, because Cameco is, of course, also one of the most popular stocks if you want to invest in this particular sector. And there we see the stock, which has already performed very, very well. And it's also becoming clear here that we are in a solid uptrend, and the stock can certainly continue to perform well. What I would like to point out here, however, is the valuation, which is really naturally very, very high right now, even for a naturally fast-growing market. But it must be said that we have reached valuation levels here that are more typical for tech companies, with a price-to-sales ratio of 20. You can also see it here in the history that this might represent a bit of a small bubble. So I'd probably be a bit cautious regarding Cameco. Sure, the stock can keep running for now, as long as this story is intact, that AI data centers, that this power demand is skyrocketing so much. Yes, as long as this narrative continues to unfold, Cameco can certainly keep going. However, one must simply be aware of the fact that the potential downside risk for the stock is considerably high, and that in the event of any negative news, the stock could then also correct much more significantly. What's also positive, for one, the consistently high gross margin has actually been quite strong in recent years, especially since the acquisition by Westinghouse. They've improved the margins or made themselves more independent from the fluctuating uranium price. This means they had stable margins, stable net profit margins, more or less, but also more consistent cash flows and significantly higher cash flows, as you can clearly see here in the chart. They are also currently in the process of becoming debt-free again. That is also very positive, especially in times of high interest rates. This is, of course, a net debt and also an interest burden, which consequently puts pressure on the cash flows, and that's something that really cannot be overlooked. The PE ratio is actually quite high. A PE ratio of over 100, I actually find quite expensive for a sector, I must say. So as for the stock, everyone naturally has to decide for themselves if they still want to invest in a stock like this. There's no reason to buy it for the dividend either. We only have a dividend yield of 0.15%. Maybe the next stock is going to be a bit more interesting. And before we take a detailed look at Kazatomprom, just a quick note. Please leave a thumbs up if you like the video and subscribe so you don't miss anything. And if you'd like to get the charts from TradingView, there's currently a $15 discount on your first subscription via the link that you can find in the video description or also in the pinned comment. So let's first take a look at Kazatomprom's chart before we gather some of the key facts for the company, and then we see clearly Kazatomprom has also performed very, very well, having broken out of this years-long consolidation formation here, or rather cleared this resistance at 45 euros and accordingly continued its strong upward movement. The share is now trading at 67 euros, having consolidated back and forth a bit in recent weeks. Accordingly, the stock is waiting for new impulses, and should the uranium price continue its rise towards $150, we could also see new all-time highs for Kazatomprom. It's also quite possible, as the stock has shown in the past, that if the uranium price moves very little, then naturally we should first expect a wider range between 60 and 70 or 75 euros. Well, what I've said about dividends, when you compare them to Cameco, is that Kazatomprom is generally more interesting. We have an indicated dividend yield of 2.8%. If we take a look at this, it's had continuous dividend payments, and the dividend has also consistently been well increased in recent years, specifically in the last 10 years, from just 70 cents to now, basically tripled to over 2 euros 20 per share. Well, that's quite substantial, and accordingly, if the uranium price keeps rising, I also anticipate continuously increasing dividends. Let's look at the gross margins and the net profit margins. They are stable, naturally a bit volatile, but generally they've also been better historically than Cameco's. You also have significantly lower production costs. They have naturally very good deposits. And generally, when it comes to the stock, the valuation isn't quite as high. One must also acknowledge, however, that Kazatomprom is naturally traded at a certain discount, right? I mean, because the company's stock is situated within the broader Russian sphere. Clearly, Kazakhstan is not Russia, but there is a certain political risk that is always present. Accordingly, the stock is only available with a slight discount, a markdown in its valuation. But fundamentally, the stock has performed quite well here as well. And for Kazatomprom standards, with its price to earnings ratio beyond 5, it's not exactly cheap. You have to be aware of that. That means, if I were to enter the market right now, and I'm actually considering it, I'm finding it quite a bit more difficult, all things considered, because of the high valuation, then I would only secure the stock with a suitable stop loss order. Anyway, as I said, let's take a closer look at the facts about Kazatomprom. Also, as I mentioned, it's a very, very exciting stock, and it's generally valued more affordably. The revenue growth isn't quite as strong, but other factors like the dividend are quite interesting. There are very substantial reserves, meaning there's still a long, the mine's operational life is still very, very extensive, and consequently there's absolutely no risk here that the production will need to be halted or shut down anytime soon. They possess 27 distinct deposits, which is truly a very, very impressive and significant number. And the investment thesis here is primarily based on the idea that one, benefits from the increasing uranium prices and the rising demand for uranium. So let's move on to the next stock, and that is Uranium Energy from America. It's naturally also very, very interesting because the USA is particularly keen on securing its raw material independence. And among these, of course, are critical raw materials, and that specifically includes uranium. I don't know if it's officially classified as such, but in my opinion, it should certainly be included. And Uranium Energy has also had a pretty good run, similar to Kazatomprom, actually breaking out above this resistance zone here at $8.40. It's continuing to consolidate at a high level. The stock here also corrected a bit more strongly due to the Iran war, because of course the stock isn't exactly favorably valued, it must be said. So we now have the first revenues as far as that goes for this company. We can see that here. The first revenues are now coming in, and we now have a market capitalization of almost $7 billion. That's already, quite substantial. Accordingly, the price to sales ratios are naturally high, but what's relevant here is the potential for larger production volumes in the next few years, and the fact that it's based in the US and therefore also has political tailwind. So let's take a closer look here at the fundamental facts concerning Uranium Energy. It is America's largest and fastest growing uranium mining company with low cost projects located in Texas and Wyoming. And it boasts a high ore content. And what exactly makes this project and the company so incredibly interesting? They have very high liquid funds. The debt is manageable, and they are actually quite well positioned. And as I said, they also had political backing. This means that here too, we've already seen in this sector, not in the uranium sector, I believe, but at least with other raw materials, that the US government also provides appropriate funding. Yes, as I mentioned, here are some additional facts regarding Uranium Energy. We currently have 2 production facilities with relatively small output volumes already in operation. Several more are either under active development or undergoing feasibility studies. The investment thesis here is quite obviously predicated on the continuously rising uranium price, much like the situation with Kazatomprom. What's also very interesting is the insider activity that the CEO has actually repurchased shares, and not just in small amounts, but in substantial quantities. And that's generally a positive sign when the CEO invests in their own company. So let's move on to the next company now. This is Centrus Energy. Centrus Energy is a uranium enrichment company. This means that we are moving a significant step further up the value chain, and we are the only Western producer of HALEU. Uranium fuel, a critical fuel source, which is primarily used for advanced reactor designs, including, among others, for Oklo, that is to say, for the small modular reactors, which are, currently at least considered future concepts and ideas. We'll take a look at Oklo in just a moment. Centrus Energy, I actually find it to be one of the best among all the available stocks, precisely because they possess a small, almost monopolistic market position, precisely because they are the sole Western producer of this HALEU material fuel. The stock, of course, like the entire sector, has seen its valuation increase. We'll also see that again in the chart in a moment, but relatively speaking, I actually still find this stock to be among the most interesting. Basically, they have a very good order backlog of over $8 or nearly $4 billion. And this fuel is especially important when more new types of nuclear reactors are built, and particularly with the advent of small modular reactors, that will naturally also be another revenue driver for Centrus Energy. So for me, this is the main thesis why Centrus Energy is so interesting. I actually had the stock in my portfolio for a while, and I'll be keeping an eye out for when I can buy it on a dip. We'll then take a closer look at that in the TradingView chart. What I definitely wanted to mention here is that short interest is relatively high for this particular sector. Yes, we have a short interest of just under 23% and also insider sales. You really need to keep this in mind. This isn't necessarily a bad thing in itself, but it's certainly a small thorn in one's side. Let's take a closer look at Centrus Energy. And we can already see that the stock has performed very, very well. But in recent months, it has unfortunately lost a good deal of its value. From its peak, it's currently down more than or almost 60%. That's a very substantial drop. By definition, we are also, if you look at it that way, actually in a downtrend, or rather it still looks relatively good because you can actually see it as a consolidation formation. But what I definitely don't want to see here is that we at Centrus Energy fall below this mark, below this interim bottom that we've now set here at $165, that we fall below that, because then we also have to expect much lower prices. So my next price target is accordingly $120. But the stock actually becomes quite interesting then, because I truly see the fundamental opportunities for it in the long term, that the fuel will naturally be in demand. And if you're able to purchase this stock right now at a relatively affordable level, I also believe that the long-term outlook spanning several years is quite promising for this particular stock. The price to sales ratio has already significantly decreased. We were at the peak, similar to Cameco, at a price to sales ratio of around 2017 to be precise. The stock before the boom had a price to sales ratio of 3. Currently we're at 10. That is, of course, still relatively high. with a price to sales ratio of 10, you also need to grow substantially. However, we are only seeing relatively slight growth from this company. The growth is certainly there, but at a lower level, yet at least consistent. And the speculation as to why the stock has performed so well is that growth is expected to further increase or accelerate in the coming years due to increased demand. Another thing that isn't quite as positive, or what I'd prefer to see better here, is the gross margin, which is actually very, very volatile, and recently even showed a negative gross margin. That is, of course, extremely bad. And in itself, a slight downward trend can also be seen here. Similarly, in the net profit margin, which also, leaves much to be desired in the latest quarterly figures. I hope that now with the higher uranium prices and the higher fuel prices, they will also be able to pass that on. And the demand, of course, if a shortage of fuels arises here, then that should also significantly boost Centrus Energy's margins. Yes, the free cash flows are accordingly also leaving much to be desired. We had in the last quarter a record negative cash flow of minus $58 million. It had, of course, fluctuated over the last few years, but this was a record low. Fundamentally, they also invest in their business. It's worth noting. And above all, overall, the cash flows in the last year were quite good. One is completely debt-free, and that is also extremely important. A substantial amount of cash has been accumulated. This means that one is very well prepared to effectively capitalize on the increased demand and to continue making investments in one's business. So let's take a look at Oklo, and Oklo is, of course, clearly the more speculative, or rather the most speculative stock we have here. They have no revenue, which is why it's difficult to value the stock. We currently have Oklo at a valuation of $10 billion. That's already very, very high, with current revenue of 0. The first revenues are then expected to come in the next few years. We'll look at that in a moment. The positive here is that the company is debt-free. That is often the most important thing for such companies that have no revenue yet. And yes, analysts actually see the stock on average up 60%. The stock has already pulled back quite a lot, and I actually find the stock quite interesting, like a small speculative bet for the next few years. If we look at the earnings per share forecast up to 2029, it remains negative. So there will be no profits in the next few years, and significant revenues are only expected to come around 2028-29, with sales projected to be approximately or just under $100 million. So let's take a closer look at some of the facts concerning Oklo. As I've mentioned, they are one of the interesting small modular reactor manufacturers. They have good partnerships, and I find that very, very interesting. Clearly, they still have a relatively high net loss and cash burn, but and it's also important to mention they have a very good cash position, and therefore their survival is quite secure. Yes, otherwise, what's often among the most interesting things to consider are the operational projects. So they have an OB, a project that's currently under construction, the Aurora project. They also have the partnerships in place, as I mentioned. We have another approved project that's been approved in Idaho, and a planned advanced fuel center in Tennessee. So something's happening, but you shouldn't expect too much too soon. The stock could actually halve again if the whole topic disappears a bit from the media. There was also a certain hype around it, I must say. But with this particular stock, it's certainly quite possible that if the narrative is played out again and that momentum comes back into the stock, that we could also perhaps run back towards those old highs. The CEO sold over 200,000 shares in the first quarter of 2025. That's obviously also a bad sign. That's definitely something to keep an eye on. The general question with small modular reactor technology is whether it will truly catch on, if it's profitable and if it actually has a future, or if it's just a nice gimmick. Because the stock, and one must always bear in mind, is still very, very expensively valued, even though the stock has already more than halved here. We're coming from a peak of almost $200. that is already really extreme, and it's now down 75%. So the stock was valued at $40 billion for a company that in the next 5 years still won't make any profit. That reminds one a bit of a bubble. And what we also have to say, of course, these recent price reactions are very, very strong, but we are still in a significant downtrend. And as long as we don't break through it upwards, we cannot expect a trend reversal or sustainable gains. This means you can easily burn your fingers here. Even if the stock climbs to $66, it's still dangerous. We first need to wait for a bottom to form to be able to say that you can invest even a little in Oklo. And generally, I want to tell you that we're talking more about speculation here because there are still so many question marks remaining. That was my take on the uranium sector. I hope you enjoyed it. Please comment below on stocks you find interesting, and I hope to see you in a future video. Until then, I wish you all the best, much success, and remember, a thumbs up would be greatly appreciated. And if you're interested in the TradingView subscription for a $15 saving, please check out the link. Thank you. See you then. Ciao.